What's happening? My name is Mike. Thanks for joining me today, friends. This is another episode on the channel that you've known to grow and love called Health and Wealth. Thanks for joining again. As I said before, tonight we're going to be discussing NVDI, NVDY, as well as NVIDIA. We're going to talk about YieldMax, good, the bad, the ugly. And I want to go over some things that I feel are very important for investors to start to investigate. So I have been very pro YieldMax in my investment portfolio. I have 98% of that investment portfolio I share with you is in YieldMax. And yeah, it's done all right. It's paid out good distributions so far. I've had it for I don't know what, like almost 2 years. I've had YieldMax. So I started with TSLY, and then that's all I had for I don't know, 4 months, something like that, 5 months, and then I switched over to so I guess it hasn't been 2 years, like a year and a half, and then I switched it over to NVIDIA NVDY last April, because of the reverse split at TSLY. I wasn't happy with the way they were running TSLY, and I'm still not happy with the way TSLY is being ran right now. It's being run into the ground, quite frankly. If you take a look at the share price, TSLY has those giant peaks and valleys and ups and downs, and TSLA has those peaks and valleys, and you guys are getting your distributions from TSLY, but the share price continues to go down, and it really shouldn't, right? It's as if you're getting paid with your own money with Tesla, and I'm not a huge fan of that. So I started to really think about NVDY and how is it being run. So I've gone ahead and I've pulled some data right from YieldMax's website, and I want to go over the positives. And I don't want to make this video too negative, but I want to exercise caution because this is the money that I'm investing, and I want to make sure it's invested correctly. So first thing I'm going to do, I'm going to pull up NVIDIA's website, and I want to make this a point here because NVIDIA itself right now is at $147. If you take a look at the last 5 days, it's up 6.2% or $8.60. I'll zoom into that a little bit here. Last month here, up 5%. Last 6 months, up 20%. So really good. Last 6 months, 20%. You can't go wrong with that. I mean, if you do that over an annualized basis, we're looking at 40% increase in NVIDIA. That's unbelievable. If you think about it long term, and that continues to grow at a 40% annual rate, woof, you'd be probably feeling pretty darn good about that, right? So it's doing very, very well. Now, I do want to come back to this page. We'll go over a couple of things on here a little bit. But I want to take a look at NVIDIA itself in that same time period. We're talking 6 months here, right? Same time period, NVIDIA is down 13%. So if NVIDIA is up 20%, and we're down 13% on our NVIDIA investment, why? Right? Is it because we're getting paid too much of a distribution? Are they paying out of their profits? Are they actually paying you money that has been earned? That's the question I want you to ask yourself when you make this investment. So again, I am grateful that I've got distributions so far. And I mean, they really have paid out some great distributions in the last 10 months. It's been really good, really good. Let's go take a look at those distributions. I have NVIDIA's page open here, and I'm going to scroll up a little bit here just so we can take a look at them. And if we go for a year, let's go January of last year. So 62 cents, $1.53, 262, 260, 198, 256, 247. These are monstrous distributions. Now, at the time, NVIDIA was skyrocketing. We had 100% return from NVIDIA in that time. It was absolutely dominating the world, and it still remains dominating the world right now. $1.25, $1.35. You can see things slowing down here. $1.09, $2, $1.18, and 89 cents this last distribution. We have one more coming out here in 8 days. Will be the next one. So a week and 3 days from now. They say their current distribution rate is 49%. It's getting a little low for my likings. Now, I am a Canadian investor, and because of that, I have to pay 15% withholding tax. So that's on all distributions that I get. And so I don't know, is it lucrative enough for me? Now, that's the question. Now, NVIDIA itself, again, $23.70. I have ran some numbers here. I've had it for 8 months now. Actually, I think that's probably about 10 months now because I got it April. And so minus the math here. So like 9 months I've had it. 9 months, we'll say. Okay. Which is, not bad. I've enjoyed it. My total investment into NVIDIA was 9,405 US dollars. The total distributions received in that time is $3,510. So that's very, very good. I cannot be too angry at that at all. But it's returned a realized return on capital of 37%. And again, can't be too mad about that, right? So if we take a look at the last 9 months for NVIDIA, I mean, that's going to be a little more difficult to do, but let's go. Let's test it out. So 9 months ago was what? March? Oh, wrong button. Let's go March here. Actually, it was end of March, beginning of April. So it was at $90, and now it's at $147, right? So it's gone up $50 since then. And remind me, was there a split in there somewhere? I've forgotten, but yeah, it's gone up $50. If you take a look at the share price from 90 to 50, that's quite the climb for sure. It's definitely more than this 37% right here. Now, on top of that, in that same time, my average share price was $27.92. The current price is $23.70. So I have a 15% loss in unrealized loss right now if I were to sell those shares. So if you do the math between the two of them, we're looking at 37%. Let's do it. Let's do it live, all right? Get the calculator right here. 37 minus that 15. We're up 22% so far in that same time period. Now, if I had my money in NVIDIA during that time period, I'd be up a lot more. But I wouldn't be getting that juicy income that we all talk about. So the point I'm trying to make here is when you make an investment, you want it to be a winning investment. And this has been 9 months. It's made me 22%. When it first came out, when I first bought into in April, we were at distributions of over 100%. And this is showing to us right now that I haven't made over 100% in that time period. I've made 22%, which again, it's good. It's good, but it's not 100%. It's not 40% like they're boasting right now. So I want to think, why is the share price continuing to go down? This is a share that has just steadily gone up. And again, YieldMax is writing calls and options on the play of NVIDIA over here. And NVIDIA over the last year has gone up 145%. So why wouldn't the NVIDIA follow at least relatively closely, right? It's gone up minus 1% in that same time. Now, you're going to say, but Mike, you get your distributions, you get the income yield max, right? Well, I went ahead and I took a look at their most recent plays here. This was yesterday. And I want you to take a close look at anything that has a BC next to it. BC means they have to buy to close. BCs means that, and especially if they're closing these early in the week, it means that they have not done a great job. Now, if it's a BC and it's only a couple of cents, then that's really good, right? You've won. But when we take a look at that first buy to close up here, they had to pay $6.53 per option to close this. Let's go look at the next one. $4.08 to close that as well. Let's go look at the next one. $6 to close this. Next, $3.95. And the last one here, $6.55. When errors like this happen, our share price goes down. The amount of income that we receive during distribution day goes down. When YieldMax goes for the max, you can see a whole bunch of different plays right here. We're going to have some new options and things like that. you can see that the premiums they receive are far lower than the mistakes that were caused by trying to go for yield max. Now, what YieldMax's new strategy is, and it's not that new anymore, is to go ahead and put out, write a call at a certain price and then credit call spread far, far above that. Has that new strategy worked? I implore and I ask Jay at YieldMax to do an analysis on that and let the community know if it's worked and how it's worked and how much have we made with this strategy, because I have a feeling it hasn't worked. So since this new strategy came out, our yield max has come down too, right? Because we have to pay for that credit call spread. Not we, yield max does. And so that comes to the investor. That's us having to pay. Now, if they had have just written their calls slightly higher than what they did, they wouldn't be paying out the $6.50, or they wouldn't be buying the close for $6.53. They probably would have let this option ride until tomorrow, and then they would have closed it for pennies on the dollar. So instead of trying to go ahead and let's just take a look at this first one here, write a call for January 24th for $140. Let's go take a look at the website here. $140. Why not make it 145? Why not make it 147? So yes, you'll make a little bit less than the premium, but you're not sitting here paying out 653, 408, 395, 655. You're not doing that. And this happens every single week. I found this on their website. They don't show it to you anymore on their website. If you scroll down here, they used to show you down here all of their positions for the week. They don't do that anymore. Now they're showing you just the synthetic option. So I found this here on the website under the intraday trade download, where you can find the information of their day-to-day interactions. And I'm not happy with that at all. Okay, so if this was my strategy, my money, oh my goodness, I would change strategy very, very fast, right? Now remember, how does YieldMax make money? Let me just scroll up here and show you. They make money by that number right there. They get 0.99% of all money in the fund. So this is now $1.55 billion, and that's how they're making their money. They don't make money on these calls. That's what we make the money on. And when they don't do a great job, I don't think I personally would continue to invest in that fund. So here's what I'm planning on doing. I'm taking this distribution on January 31st, and I'm going to go ahead and just put it all into NVIDIA, and to play the earnings coming up, which is mid to, I think it's like February 23rd. Okay, because I believe in NVIDIA. I mean, if it pays anything like it did last month, or last year, is 145%. I don't think it's going to be anywhere close to that, but it's got to be better than minus 23% in the fund. It's got to be better than 22% in income brought in, right? So I'm going to keep those NVIDIA shares there, but I want to make sure, I want to see a better performance. So stop going so close to the price of the underlying, and get us something. Because if you look at this is not yielding anything. We are minusing dollars every single week. So I encourage you as the viewer to this channel to go take a look at that website and make an educated decision yourself if that's something that you want to be involved in or not. But the purpose of this channel is a little bit of education and showing you where to look to invest your own money. For me, I'm investing my own money. I'm keeping it there. I'll take those distributions. I'm going to start buying that NVIDIA with that money. And we'll see how far that takes me. But yeah, not super happy. But I want to just kind of share with you, I don't want it to be super negative, this conversation. I am pleased with this number down below. They have paid me $5,000, $5,033 since it's come out, since I've had it, which is April. That's the orange one right here. Anything in orange has been a distribution, which is nice, right? It's been good, but it could be better. Okay. I want to follow up with couple things here. NVIDIA itself, there's a couple things. These stocks move the most today. We're talking AI, right? AI technology. That's a big one. Load up as Blackwell ramps up, says top investor about NVIDIA stock. That came out 3 hours ago. This analyst thinks NVIDIA stock is part of the Trump trade. Why that's good. And NVIDIA stock falls despite Stargate. Why SK Hynix is weighing on chip makers. So this is definitely not advice at all. I'm literally some guy on YouTube with minimal education in the finance world. I'm just sharing what I'm seeing with these two eyes right here. Actually, is there four there? Yeah. But take a look at a couple things over here. Quarterly financials. This is as of October. And with the earnings coming up, the NVIDIA people said that they are going to have soft earnings in the next two earnings. So this is earnings number 1. 3 months from that will be earnings number 2. And then after that, the sky is the limit. Absolutely. I've got this video for you guys. I hope you enjoy it. And then we'll come talk right after, okay? Here we go.
Head of Technology Research at Wedbush. Dan, you've been listening to the president's press conference, and I'm wondering, as an analyst who covers a lot of these names, at what point do you start actually modeling in? Do you wait until there are contracts, or do you acknowledge that there is some sort of expectation and therefore you get excited alongside? You know, we saw the stock react in the late afternoon.
Yeah, look, Melissa, I think it's something you're going to have to start to model in. I mean, not just for names like Oracle, but especially when it comes to any of these sort of data center innovation plays, the Palantirs, Microsoft, and others. And I think now it's a question of the multiplier effect and how quick this is going to happen. But we're seeing this off to a fast start, and everything we're seeing in the Beltway, this is going to be just really, really positive for more of the data center players, from Microsoft, for Amazon, for Google, and of course for Oracle.
Hey, Dan, it's Dan. You know, when you think about some of these numbers being thrown around, there's no specifics here. You know, Microsoft gave some CapEx guidance, I want to say a few weeks ago. They kind of guided to maybe $80 billion in the next year or so. 40 of that was going to be overseas. Don't you get to a point where you can only build so much data center infrastructure here in the U.S., especially for these big multinationals who have to serve other places around the world? And the last part of this question is, and what about power consumption? Like, at some point, there's only so much data centers you can build in the near term because you are power constrained.
Yeah, Dan, I mean, you hit on a great point, because the reality is we could talk about these CapEx numbers, but it's about, you need the grid, you need the energy, and we could talk about nuclear and other names like ACO and, you know, and others. But if you look on the data center side, I mean, there's essentially going to be more data centers under construction than actual data centers. But now, how quickly that gets built, and especially when we'll see it in earnings, but for Microsoft, for Amazon, for Google, the CapEx is there. But now it's about monetizing and how quick. That's what the street's going to be focused on for the next 2, 3, 4 quarters.
Dan, it's Tim. So let's do that then. So let's act like today didn't happen. As you were looking at the universe of getting exposure to AI across, you know, a number of different, let's call it just ancillary industries, but or straight out of Broadcom, or straight out of, you know, some part of the legacy players we know about. Where are you coming into today before this news?
Look, Tim, I think you're looking at not just Broadcom, but what I believe is sort of the second, third derivatives. I think this is bullish for software. I think when you look at names like Salesforce.com, Mongo, of course, names like Palantir and others, because as the data centers get built, it's skating to where the puck's going. Where are the use cases? That's really what the key is going to be over the next 2, 3, 4 quarters. And I think this is bullish for software, because data centers, they get built out, the use cases are going to be software driven.
But the use cases aren't clear right now. I mean, are we going to be at a point where we have the data centers in place, but the use cases, that part of the equation hasn't exactly caught up?
Yeah, I think right now it's starting to catch. I mean, I think we saw it with Benioff and Salesforce. We've seen it with ServiceNow, Palantir, and now the use cases are really going to start to explode, because these companies, when you talk about all the AI CapEx, it's about the multiplier. For every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That's bullish for all these data center players, bullish for software, and that's going to really be the focus going into earnings season in terms of playing out these sort of next derivatives of AI.
Yeah, Dan, I went sort of AI adjacent. I looked at Dell, and I'm like, you know what? On the margins, it's got to be good for that stock, especially given the fact that it has sold off significantly since that huge move we saw, I think it was the fall of last year.
Yeah, I think Dell has gotten overly hit. I think when you think about ones that are going to play, of course, it's Oracle, but names like Dell, you could argue names like Cisco and others are going to be beneficiaries here because what you're seeing over the last 24 hours from Trump, I mean, it's a green light from an innovation perspective. And that's not just going to be some of the data center players, it's all the U.S. tech players. I mean, everyone's going to try to get in on this, massive spending wave. This is just the beginning. And I think Dell clearly will be a beneficiary there.
What do you guys think? What do you think about the play, taking the distributions, moving them over to NVIDIA, and maybe for the next 6 months, 8 months, and see how that goes, see where it takes me. NVIDIA's price targets are ranging all the way up to $175 with one wildcat all the way at $220. I think for me, it's the right move to make at this time. I love NVIDIA. I love the thought of getting a distribution every single month, but I also like the thought of my bank account or my investing account expanding quicker. So I think with that income, I can go ahead and buy that asset, and it will propel me further in the future. You guys see that door open? I got a dog. My name is Mike. This channel right here is Health and Wealth. I hope that you, actually right up here, that's Health and Wealth. I hope you have a great night, and we'll talk again soon. Bye for now.